When we look at the past couple of days on the S&P, we can see that we're not really going anywhere, and this is important. You keep riding this line all the way back here from the 28th, and as we go back a little further and we really drill into it, it takes us all back to that 14th level. This is what we went through before. We talked about how the blackout period is going to affect us. Now, this is where it gets interesting because the blackout period is going to continue, but let's just start at the beginning and then we'll go from there. Welcome back, everybody. We have a lot to go over here, especially with the S&P. I'm going to spend a lot of time on here, and I want to show you some of the internals because they're not what you think. Now, for our purposes, what we're going to do is just focus on the cup and handle, the breakout, the retest, and then how we just lifted. From those levels, we're going to clean everything off, and I want to show you this because I think this is very important for people to get, especially if you haven't seen it before. If you just go back to what I just did on the 14th and you mark off that level from when the blackout period started, meaning corporate buybacks, from when that started, that marked your low. That is pretty rare. It usually does not mark the low. And this is just telling you very clearly you've been in a range. That's all you've done so far on the ES S&P 500. Now, you have had some moves in the S&P since then, and I think that this part's really important. Now, if somebody would have told you from the 14th on, out of the major sectors that are out there, you're going to see the KRE and you're going to see oil, they're going to perform the best. And then it's going to be XLC, XLF, then cloud, then energy, then silver. And then you're going to get to the S&P. You wouldn't believe that they're underperforming or outperforming and the XLK is underperforming, but that's exactly what's happening. You're actually seeing a rally here in the regional banks, and you're actually seeing a rally. And now you would think that you're seeing a rally in the CL. We would think that, right? But the fact that you're seeing a rally in small cap regional banks is kind of crazy when you think about it, but that's what's happening. And when we look down here, obviously uranium down, defense, biotech, the SOX is one of the worst performing indexes in this period of time. And again, we're doing from the 14th to date, and I think that's an important distinction. Now, if you came into January and you thought that this is what it was going to look like, you wouldn't believe it. But if you start coming into these smaller time frames, you can start seeing where money's going and where money's not going. And there's a couple common themes here. The first thing that I think we should point out is if you take a look at Friday and what happened on Friday, and what we would do is we would use this because you had an event on Thursday, and did that event change things? And I think it's pretty clear that that event didn't really change a whole heck of a lot. You pretty much had the same group moving up and the same group moving down. What we are seeing by using different time frames is the following. You are seeing that you are starting to see the SOX start to move back up, and cloud continues to move up, and financials are moving up. So if we use a demarcation line, and what I like to use as a demarcation line is just look for the SPY and then use that, and everything above it is outperformance, right? I mean, it's pretty simple if you think about it that way. It's going to show you some energy, but really the financials are just completely, utterly outperforming. We went through our stress test, our bank stress test, and that's why you're seeing the KREs of the world and the XLFs move. And that bodes really well for us on the financial side. We're going to get to a couple of those names in a moment. But then you have oil, and oil continues to move higher. Now, is that going to be a problem for inflation? Well, there's a couple problems out there for inflation, but we didn't see any of that today. Now, JOLTS job numbers, job openings is right here. And this tells you exactly what it is. It refers to all positions that are open and not filled in the last business day of the month. Job openings are part of job openings and labor turnover, and they refer to that as JOLTS. The survey collects data from 1,600 non-farm establishments, including retailers, manufacturers, federal, state, and local government entities. And it's a way of saying, hey, how many jobs are open? And the more jobs that are open, the more potential there is, the hotter the economy, the tighter the labor market, et cetera, et cetera. And you can see that actually there are more job openings than was forecasted. So is this a big number that we should be worried about on the side of inflation? And the answer is not really. It's not something that we'd have to look at. It's certainly not something that you'd have to pay attention to and say, hey, this is something that we have to really concern ourselves with. You're pretty much in line with what expectations would be. But let's just take a step back and look at regional banks. Now, why are regional banks doing this? Well, we actually have a real reason for this. We had the bank stress test that came out the other day, and that actually went really well. FCNCA is one of the banks that was able to buy assets, and we can see how that is continuing to just grind higher. This is one of the banks back in the day that was actually able to buy assets. and they bought them at a huge discount, and they did quite well. The other one that bought assets was NYCB, and they were able to buy assets as well, and they bought the wrong assets, and that's why this happened. Quite frankly, it's a shame. It was a great bank. They were around forever. I know they have a lot of issues. But if we're looking here, you're going to see strength in certain regional banks. Take a look at some of these banks. Like Key, you're starting to see some real turnarounds here. And this is stuff that you just might want to pay attention to. You know, you're going to, instead of me spending a lot of time on it, you might want to just go through the charts yourself and take a look at them. The one that I'm focused on the most is always this FCNCA. They withstood the test of time. They got to buy the best assets. They got a great deal on it. It is very rare that you get to look at a regional bank that comes out of a crisis like this and has a triple. And that's exactly what you have. You literally have a triple on the stock since that date. And I think that's pretty important. So now let's go take a look at the XLF and what's going on in financials. Up, down, up, right? Tighter, tighter, tighter. And look at today's bar. You know, it's so funny. I love this about trading. Everyone's like, nothing's going to happen this week. It's going to be a slow week. And it's been an absolute monster week to trade. And you can just see that. We're going to go through some of it right now. But take a look at that bar. That's a Marbuzu white. What does that bar mean? That means that you have no shadow, meaning from the open to the close, you were bought all day. Remember, wicks are price rejection, and that's exactly what happened in there. Look how tight this is getting. We need new leadership. Quite frankly, we're getting it. And you're going to say, are we? And I'm going to say, yes, we are. Here's JP Morgan. Now, just disclosure, I have a position. We've been trading this in the community for some time. I have a position in this. It's done exceptionally well. Now it's setting up to finally break out, coming back over this bar where a diamond basically said, oh, our stock's too high. I wouldn't buy it here. And people not realizing that he was actually trying to get the stock down so he could what? Buy it ahead of the stress test. Welcome to the party. If you think these guys have your best interest in heart, they don't. So again, you always mark off these control bars and you want to see how you're doing. Today's day one above that control bar. Look at this on a weekly. Look how beautiful that is. It's crazy how nice that chart looks. It's absolutely stunning how nice that chart looks. And you're seeing this spread out into other sectors. Citigroup did fairly well as well. And look at this. You have a perfect pendant sitting right there, getting ready to break out on a higher high. Wells Fargo as well. So are we getting leading names? Yeah, the financials. The financials are setting up really nicely. Even Goldman, that didn't do very well, actually moved today, which was surprising. But I would focus on the ones that did do well. And that leads us to the next part of that entire sector where you would be looking at the Visas of the world that actually got shellacked on that bank stress test. MasterCard shellacked. But what's happening? What we're seeing happen in every single sector, they're finding supports. Look at these bars. That's a clear reversal bar. Very clear reversal bar. Overlay the simplest of indicators. I have a 12, a 25, or a 12, a 22, and a 55. It's been a long trading day. And if I look at that, it's not the best one. I mean, it's better than being kicked in the shins, but it's not the best one. You go and take a look at something like a Discover that did pretty well on that stress test, and look at how that's acting. And look at that on a weekly. So what are we getting? We're getting new leadership. And some of the new leadership is actually old leadership. And that's the beautiful thing about when you go through things like this with the Qs. Now, does this look like a pullback? Let's get rid of 1,000 levels. Does that look like a pullback? Does this look like a bear market or anything that we should be remotely concerned about? No. What you have is good old-fashioned rotation. And it's throwing people off. And it's throwing people off for a lot of reasons because they don't know what to do with it. They don't know what to do with the uncertainty. And I'm going to show you that they don't know what to do with the uncertainty. Here's a great example of it. This is VXTLT. And what this is the volatility bond ETF of the 20-year Treasury. Now, if we take this, there is a really good, solid way to look at the market. And by looking at the 20-year Treasury, if you're trying to see where we are trading it according to yields on volatility, you take this and then you take the VIX, which is the S&P, and you overlay them. Now, if I do this for any period of time at all, you're going to note something. You're going to note very clearly that what do you see that happens here? Well, obviously, you're not going to be able to answer me, but what do you say? VIX always leads what? The 20-year. So it always plays catch up. Always plays catch up, right? Blue always plays catch up to orange. We can all see that, right? Very clearly. It's pretty obvious, but you can see it if you spend some time with it. Now, we go here and take a look at the daily. This is where it gets interesting. This divergence on a daily basis is the biggest divergence you've had in 10 years. You don't usually get a divergence like that. It just doesn't happen that often. As a matter of fact, it's 10 years from the piece of research that I read, that with that disparity, the depth of that disparity and how it's widening. So what does that mean? It means that people just don't know what they're supposed to do with what's going on right now in the market. I think that's good and I think it's bad. I think it does bode well for people that are looking at the 20-year, but then you have all this other economic data that's coming out. And that's going to take us right into what I think is the most important topic out there. Tomorrow, you have a half day, and you have a half day into Fed minutes. And I think that that's really important. You see this right here, 2 o'clock, Fed minutes are going to come out. And in between when Fed minutes come out and what we're doing, we're closed into Fed minutes. So FOMC minutes, you're not going to be able to act until Friday. And I think that that is, once again, another boondoggle. But there it is. Now, also, you have ADP employment change, 152 versus consensus coming out. You have PMI final, PMI services, ISM final. So you have a tremendous amount of data that is coming out tomorrow, and this is what you have. And I think it puts us in a really awkward position going into Friday into non-farm payrolls. Now, we had light volume today, the half day tomorrow, off on Thursday, and then you're going to come in to non-farm payrolls. What's fascinating to me is this week is supposed to have extremely light volume, and the volatility is usually pretty wild. What I'm seeing is I'm not seeing that. Now, I'm not saying you're not seeing a ton of light volume, but just take a look at Microsoft for a second. I have light volume, but you're hitting all-time highs. Watch this with Apple today. Yes, I have light volume, but you're hitting all-time highs. You have no sellers. So I personally think what we're seeing is everybody historically knows that this week, if you traded for a long period of time, and I've been watching these ebbs and flows now for 25 years, the one thing that I can tell you from this is always a light volume week where you don't see anything happen. And what I see them doing is I see them front running this. I see institutions actually front running this. Now, I went over something with Smart Money Index, and we're going to go over it again in a couple days and watch it reload. And we're going to go over Smart Money, Dumb Money and see if I'm right. I think I'm right. I think we're going to see that institutions started stepping up here again. We're going to look through the block orders as well, too. But that's what I think is driving this right now. And I think that's a very important distinction because they're trying to get ahead of a couple things. Remember, all this is going on, and at the same time, you have 90% of the stocks in the S&P right now in a blackout window. And we're lifting like this. I do want to touch base on this for a moment because I do want to tell people what I think is going on here. I think this is really important, and I think you might want to watch this for a second, and you might want to rewatch part of this because I don't think people fully are grasping how this played out with the XLK. I don't think people understand that when this came out of XLK, you went from 20%, so you had about 22% in Apple of XLK. And then what happened is that went into what? NVIDIA. We all know this, that XLK rebalance. If you're a fund and you had $1 million in XLK, you had a $250,000 to $220,000 position in Apple. When you came in July 1st, what happens to that position? Actually, it was around here the 24th, that Monday. What happens when you come in? If you're still in that XLK position, you have a $40,000 position now in Apple. You are underinvested in Apple. People didn't want to have that level of underinvestment in Apple and have that level of exposure in Apple. So what they did the exact opposite of what everybody thought they were going to do. They realized that they were overweight NVIDIA. And so let's take this out for a minute. Stay with me for a second. But if you go back to the 24th and you go back to that date, you're going to see that right in here, pretty much that's marking right where the high was. Maybe you went a little higher for like a day, and then that was pretty much it, right? What they did was they actually dumped the NVIDIA and kept the NVIDIA because of the XLK position. And then what they did, because look, XLK hasn't gone anywhere. And then what they did was they bought Apple. Because if you go and take a look at it, that's the exact movement of Apple. Now, you could say, maybe they did that, maybe they didn't. Okay, take a look at this. This is Apple in blue and NVIDIA here. This is going back 2 years. Look at this chart. Look at the cross back here. You would be hard pressed to find what I'm about to show you. Watch what happens. We'll just take this from the 20th on. Watch what starts to happen here. You start to flip. And if you get to the point where you get to the 24th, and I'm just going to scroll to that area, what happens? Look at the disparity that you're starting to see. All of a sudden, they keep selling the rallies on NVIDIA, and what are they doing? They're buying Apple. I think this is really important because I don't think they're done. I think that this is important. I think you might want to watch this again. Go and take a snapshot of any 5-minute chart and go find another area like this over the past 18 months. You can't see it. I think the way that we all looked at this, The majority of people, I should say, I would say 99% of traders got this wrong. And did they make money buying NVIDIA into it? Yes, it was kind of hard not to. But I think they're missing the bigger picture here. Apple's about to go through a major cycle. A major cycle. No one's going to want to have the phone that doesn't do all the new gadgets that they're going to put on with the new chips and the new AI stuff. Nobody's going to want to have that. It doesn't mean it goes up tomorrow, no. But this is pretty significant. And to me, the way that you're moving here, I think they're being super stealthy on purpose during this week because they know that retail, for all intensive purposes, is going to go away and not be around. I also think it's why we saw this on yesterday. If you take a look at the action yesterday, I love these bars, these hammers, because once you flip them, it's on. And here we are closing at the high. Look at the volume on the NASDAQ. I mean, it's absolutely insane. And it's broadening out, which is even crazier. Before I even get into that, I do want to review Tesla because this is something else that I think people are going to sleep on. I think they're being super sneaky right now with their positions. Look at the volume on Tesla. Okay, now I went through these deliveries. I am not this huge Tesla guy. I had a very long-term position in Tesla that I had for years and I blew it out somewhere in here on an earnings call when that Cybertruck turned into basically a paperweight and looked like it was a dumpster fire. I just had enough with the company. But now we're all about autonomous vehicles, robo-taxis, and we're all going to get maids and butlers that are robots, apparently. I guess that's the new thing. But nonetheless, I trade numbers and price, and I'll try not to sound that cynical or grumpy again. But look here, this is a multi-year level. We've been dealing with this for some time. Now, the biggest difference for me in what you're dealing with now is you haven't had a higher high. And I know that's really very difficult to think about, but you have not made a low and then made a high and then made a higher high. And you haven't done it all this time. If you really go back from November 21st, you really don't have that. And this is the first time that you have something like that. You can make the argument, well, you kind of had it here. You had no base to work off of. You really have never had a base that you really could work off of. Here's the low. And this is why I think it's interesting, because I think people are looking at this correctly. I don't think people are looking at this and understanding, like, for me, head and shoulders. Everybody will look at a head and shoulders chart and they will say, oh, a head and shoulders, they have to be flat. They don't have to be flat. The position is the position. If you truly look at what's going on here, you have a left shoulder here, you have a head here, and you have a right shoulder here. That's your neckline. You're setting up to break the neckline. I think if you look at it like that, you might see this differently. Now, you can screenshot it if that helps you, and you can turn the screenshot, but it's there. What's more important, you see this volume? Look at that volume coming out there. It was absolutely glaring. Look at this. We have not had volume like this in a long, long time. We were in this today, trading in and out disclosure at the time, talking about this. I have a position, I have options. I actually thought that it was not going to be good. I actually started out with puts overnight, which obviously were disastrous. They became wallpaper. But if you take a look at this, it was completely irrelevant because then you were just able to get in so cheap. And I just used that same simple process that we always use pre-market on data. Now, before I go forward, we did this when I was actually publicly pre-market live, which we do starting around 8. And I just want to show this because I like showing the timestamps. I'll show the actual trades later in the day. We were in and out of this all day today. And some people had this nailed. They actually came in long. Congrats for them. They actually absolutely nailed it. They crushed it. So congrats to them. Tesla long gone push. This is John when I'm live trading. I started live trading earlier today just because of what happened with Tesla. And you can just see here, I had the 205 puts. I don't hide any of my trades, guys, like in the room or everything's like there. So, not every trade's going to work. It's just not. So they turned in the wallpaper. And then a lot of people squeezed today. I thought it was pretty clear because I didn't think it was that great news. Now, remember this statement. If you have bad news and you go higher or okay news and you go higher, you had okay news and they acted like this was the greatest thing in the world. They were down 24% year over year in China. BYD is killing them in China. And this was the reaction. That tells you clearly that was nowhere near as bad as expected. Not even close. This is the process that we have used repeatedly, and I'm going to walk you through it again, and I'm going to do a video on it. But pre and post trading, if you're not doing the pre and post trading and you're waiting for it to open like everybody else, then you're going to get the same results as everybody else. If you want different results than everybody else, you have to do things that people are not going to do. I really want to hammer this home because I watch people try this and they try to get into trading, quote, into it. This is the hardest thing that you're ever going to learn, trading. It just is. They talk about the fact that, oh, this guy makes this amount of money and that guy makes that amount of money. As far as professional traders that make 8, 9 figures, there's probably less of those people than there are professional athletes in the world. So keep that in mind. And I think that people should think like that, because I think people find it discouraging that they're not getting it. It doesn't get any harder than this, guys. So you always are trying to evaluate what's working. This is called a 1-minute orb. You mark this off. You see how we always mark this data off when we do the S&P data or the NASDAQ when CPI hits or an economic data point hits? It's no different on news. Just mark it off. All you have to do is just mark it off. And then you have what's called a rising window right here. You might want to look that up, because once you see that, it is on like Donkey Kong. And all that is, do the kids still say that, on like Donkey Kong? They should. It's epic. Hold on one second here. But what you do is you mark this off right here. You see that close? Now watch this. I'll do a whole video on this if you want. Just comment below if this is one that you'd be interested in seeing the whole video on. I think this is one you should see, because there's real value in this, because nobody does this. Like they should, and they just don't get it. The algos do it. You're just picking the algos off. But see that gap right in there? They had so much buying from here to here that they couldn't find a seller for 35 cents. That tells you you're going higher, because very rare are you going to see that. You're not going to see that often. Do I get that detailed? I get that detailed. You can tell the people, ask the people in the room that they think I'm batty, but they're happy with it because it works. Now, as soon as you flip, it's on. All you have to do is go there. All you have to do, I make it sound so simple, but wait, there's more. All you have to do is go there and drop an anchored VWAP up there. That's it. Now, I traded this. I peeled out of some. I tried again to buy some, got me here a little bit, took a little bit of a loss, tried again, took another little bit of a loss, waited for it to flip and confirm, and then it was on. Okay, so, and I'm going to show all these trades, because I think it's important to get that. Just because you failed like the first time in here doesn't mean the trade's over. You still have to protect your process. See, the worst thing that could happen to you is that you have a stop here, and then you don't honor the stop, and then it drops, and then it goes higher, and then you think that's what you're supposed to do. We're Pavlovian in nature. We're training ourselves to do things. I'm not going to waste a lot of your time on it tonight. I do want to do an educational video if there's enough demand for it, because this is the kind of stuff where you can absolutely just crush people. Like your returns you'll have outsized returns because you're doing things that other people are not, and they're the people that actually win. So if you look at that level, do you think my levels are decent? Look at this. Who can draw a level? I can. So again, we just played this all day. We traded it at the time of this. I'm still long stock. I actually added to the stock later in the day again, and then added to calls as well. I think you shouldn't sleep on this, and I think you shouldn't sleep on the fact that there's new leaders. And what I'm going to leave you with is that I think 99% of people are missing a lot of opportunities. I think they are missing the new leaders that are coming out there when we start looking at the IGVs of the world. Okay, I've been talking about this for some time, and IGV in comparison to the SOX, the relative. I've been talking about this cup and handle probably for about 2 weeks now and how it's developing. We were at the low end of it. And the names that are in there. If you start running the names and the holdings, and if you're in the community, you already know this. We're in these names. I think we're up about, I have to go and take a look. We're up fairly decently in these. And they're all setting up to push higher, all of them. And so what we're seeing is we're seeing rotation. We're seeing rotation. We're seeing new leadership. And that does not mean that you sleep on NVIDIA, but that does mean that it's okay for that to rest, and it's okay for Apple to become the new leader for a while. It's okay for Tesla to possibly become the new leader. I'm having a hard time saying it, but it does seem true, doesn't it? I'm having a hard time saying it, but it could be true. It doesn't matter what I think. It matters what actually happens. That's it.